Imagine owning property in one of the most beautiful and safe countries in the world, a place where mystery and tradition meet cutting-edge modernity. Japan's real estate market is full of untapped potential, but there's a catch. If you don't know where to start, you could miss out. Let's unlock the secrets to investing in Japan in 2025. If you're thinking about real estate investing in Japan, you're in the right place. This video will walk you through everything from the legal and regulatory framework to the current market conditions, all the way through to practical considerations like due diligence. Whether you're a total beginner or someone with a little experience, by the end of this video, you'll have the knowledge you need to make your first or next investment in Japan. Let's get started. Japan's real estate market may seem like a great opportunity, but it's also one that can be overwhelming, especially for those new to international investing. From navigating complex legal systems to understanding the financial landscape, there are plenty of hurdles that can make it hard to know where to start. And here's the catch. If you don't know how to approach these challenges properly, you could end up making costly mistakes. So the big question is, how do you invest in Japanese real estate successfully without getting lost in the details? Let's break it down and focus on the key elements that will make or break your success. First, we'll dive into the legal and regulatory framework in Japan. Now, Japan is a foreigner-friendly country when it comes to real estate investment. You don't need to be a Japanese citizen to buy property here, which is a huge plus compared to other countries where foreigners are restricted in some way. This gives you a unique opportunity to tap into a stable and profitable market. However, even though there aren't major legal barriers to owning property as a foreigner, you still need to understand how the local laws work. For example, when it comes to buying property, you'll need to deal with a series of official procedures. These include obtaining a resident card or a long-term visa, which is usually required for foreigners to make large transactions, finding a legal representative or an agent, and dealing with taxes. While you don't need to be a permanent resident to invest in real estate, Japan has a relatively strict approach to the types of visas foreigners can hold. One example of this is the long-term visa, which can require specific documentation, including proof of income and a valid reason for staying. This can be something of a hurdle for investors who want to buy property but don't have a clear long-term plan for living in Japan. It's worth consulting a Japanese immigration lawyer to ensure you're meeting all the requirements. And speaking of taxes, this is something you'll want to be very aware of. Japan has both property taxes and income taxes on rental properties. Property tax is relatively straightforward, and the rates are set by local municipalities. However, rental income tax can be a bit tricky, as Japan uses a progressive tax system that increases based on your earnings. Foreign investors may also face withholding taxes on rental income, depending on their country of origin, so it's a good idea to check the tax treaty between Japan and your home country. Additionally, there are some taxes that apply when you sell the property, such as capital gains tax. In Japan, capital gains tax can vary depending on how long you've owned the property, with higher rates applied if you've owned the property for less than 5 years. It's absolutely essential to have a local accountant or financial advisor to help guide you through these things to avoid surprises down the road. Next, let's talk about the current market conditions in Japan. Unlike some countries where the real estate market can be volatile and unpredictable, Japan's market is known for its stability. Japan has a long history of strong economic performance, and its real estate market reflects this. In fact, Japan has a very mature real estate market with a well-established infrastructure, which is great for investors looking for long-term stability. Japan's market is not without challenges, however. You may have heard that Japan has an aging population, and that's true, which means that in some areas there's a declining demand for new housing. But here's the thing, Japan is a large country, and there are huge regional differences in the market. While certain rural areas may see a decline in population and property values, cities like Tokyo, Osaka, and Fukuoka continue to experience strong demand for housing, particularly rental properties. So it's important to think regionally when you're looking at Japan. What's happening in one city might not be the same as another city a few hundred miles away. For example, areas like Hokkaido and Akita are known for seeing population decreases, so real estate values can be less predictable or lower. On the other hand, cities like Fukuoka, Kyoto, and Osaka continue to see growth in both population and housing demand. Osaka, in particular, has been a hotbed for investment. with an influx of international businesses and tourists driving demand for both commercial and residential properties. Furthermore, Japan's focus on urban renewal projects in cities like Osaka and Tokyo has led to the revitalization of older neighborhoods, offering exciting investment opportunities. In fact, areas that were once considered outdated are now being transformed, which has significantly increased property values. Now, let's talk about investment potential. One of the things that makes Japan an attractive destination for foreign real estate investors is the relatively low cost of entry. Compared to some other major markets like the United States, the UK, or even Australia, you can find properties in Japan at a much more affordable price, especially in the suburbs or rural areas. This is a significant draw for investors who want to enter a market with lower upfront costs. Take, for instance, areas outside of Tokyo. While Tokyo is known for its high demand and higher price tags, there are many smaller cities and towns in Japan that offer fantastic value. Cities like Sapporo or Sendai, for example, provide more affordable property options without sacrificing potential long-term growth. Investing in such locations could provide a steady stream of rental income while minimizing your initial investment. Sapporo in particular, located on the island of Hokkaido, is an up-and-coming area with increasing rental demand due to its popularity as a tourist destination, particularly for skiing. It's an interesting market for investors looking to capitalize on Japan's domestic and international tourism boom. While property prices may be lower compared to Tokyo or Osaka, the potential for appreciation and strong rental yields make it a compelling option. And if you're looking at Tokyo, there are still areas where property prices are lower than other global cities. Shibuya, Shinjuku, and Minato are the hotspots, but areas like Setagaya or Itabashi offer a more budget-friendly approach. These areas still benefit from Tokyo's central economy, but allow investors to enter the market at a lower price point. Tokyo's real estate market continues to be strong, especially in terms of rental properties. The demand for apartments, both for short-term rentals and long-term leases, remains high due to the city's dense population and economic activity. Even with the high competition, well-located properties in Tokyo can still offer solid returns. Additionally, Japan offers strong rental yields, particularly in larger cities. The growing demand for rental properties is driven by both locals and expatriates, as many people prefer to rent instead of buying due to the high cost of homeownership. According to a report from the Japan Real Estate Institute, the average rental yield in cities like Tokyo ranges between 4 to 6%, which is attractive when compared to other international cities like New York, London, or Sydney, where yields can often be lower. The steady demand for rental properties, coupled with relatively low property prices, means investors can achieve a good return on investment. A key reason for this is Japan's low vacancy rates. Due to high population density in major urban areas, rental properties are in constant demand. Whether it's a small apartment for a student or a larger family unit, there's a market for every type of rental property. Another benefit is Japan's stable political and economic environment. Unlike other markets that may be affected by political instability or rapid inflation, Japan offers a high level of stability. This makes it a very attractive place for investors who are looking for low-risk, long-term growth. Japan's consistent GDP growth, coupled with its ability to remain economically resilient, is a huge positive for real estate investors looking for a safe bet. Now here's the most important part. Let's talk about practical considerations and due diligence. This is where many investors get tripped up. You might think that the process of investing in Japanese real estate is straightforward, but there are a lot of details you need to pay attention to in order to ensure a successful investment. First, let's talk about financing. While some countries may offer easy financing for foreign buyers, Japan is different. Most Japanese banks are not eager to lend money to foreigners, especially if you don't have a long-term residence in Japan. This is where many potential investors face their first obstacle. Without the local credit history and a permanent visa, securing financing from traditional Japanese banks can be quite difficult. However, there are still financing options available through certain banks or local lenders, but it's going to require more work, and you'll need to build a strong relationship with the lender. One of the best ways to approach this is to have a reliable local agent or broker who can help you navigate these lending options. These experts understand which banks are more likely to approve a foreigner's loan and can help you with the paperwork to ensure that everything goes smoothly. Alternatively, You can also explore private lenders or finance options from other countries that specialize in international property loans. Be aware that the terms may not be as favorable as traditional loans, but with the right preparation and negotiation, you can still make it work. Second, when it comes to finding the right property, you'll want to do thorough research. It's easy to get excited by the potential of investing in a foreign country, but don't rush the process. Always research the location thoroughly. This means checking on things like the vacancy rate in the area, the potential for future development, and of course, the property's condition. A prime example of this is the difference between high-demand urban districts and suburban or rural areas. In Tokyo, while the market remains strong, certain neighborhoods might have high vacancy rates due to overdevelopment or lack of residential appeal. On the other hand, there may be underappreciated areas that could offer you long-term potential for appreciation if you're willing to put in the time to research up-and-coming neighborhoods. You'll also want to hire an experienced local inspector to make sure the property is in good shape. Property in Japan is generally well maintained, but older buildings, particularly in smaller towns or rural areas, may require expensive renovations to meet modern standards. If you're planning to rent out your property, any renovations should be calculated into your investment plan. And don't forget about rental demand. It's important to understand if people are actively looking to rent in the area and if there are any regulations or restrictions that might affect your ability to rent the property out. Japan's rental market is highly regulated, and there are specific rules for things like rent control and tenant rights that may differ from what you're used to in other countries. Understanding these regulations can help avoid future legal issues and ensure your rental business runs smoothly. To sum up, investing in real estate in Japan in 2025 offers a lot of potential, but it's not without its challenges. To succeed, you need to understand the legal framework, stay on top of market trends, and most importantly, do your due diligence. Be sure to work with local experts, whether that's a lawyer, an accountant, or a real estate agent, to help you navigate the process smoothly. Japan's real estate market is one of the most stable in the world, and with the right strategy, you could be making profitable investments for years to come. Want to know which cities in Japan offer the best investment opportunities in 2025? Stay tuned for our next video, where we'll reveal the top 5 cities you can't afford to miss. Make sure to hit that subscribe button so you don't miss out.